Hello, everyone, and thank you for joining us for today's webinar. My name is Jeff Niebaum, and I'm with your Better Business Bureau. Today's topic will be about financial planning during a crisis and how to make those impactful decisions for your organization. We brought in one of the top financial planning experts that we know, Gina McDonald, who is a lead consultant for Fiscal Management Associates, who work exclusively with nonprofit organizations to help strengthen their financial infrastructure. And we are proud to say that they are a BBB accredited business. Gina, thanks for joining us today.
Hi, everybody. I'm Gina McDonald from Fiscal Management Associates. I'm a lead consultant with FMA, chatting with you today from Providence, Rhode Island, where I lead FMA's work in the New England region. But of course, FMA works nationally and internationally, exclusively with nonprofit organizations to help strengthen your fiscal infrastructure. Sharing information like this is just one of the ways we do our work. Let's see what we can chat about for the next hour in terms of financial planning during really these times of uncertainty, times of rapid change. And how does our nonprofit financial planning look in typical times compared to how it might look today? Knowing those differences really can help us to understand how to deal with financial planning right now. So in general, we like to think about nonprofit financial planning as the process by which a nonprofit figures out how to fund its strategy. So really it starts with that high-level strategic vision. In different times, we might have thought 3 or 5 years out. Maybe we're thinking about our 1-year annual budget. Certainly in these times of uncertainty, our timelines have shortened. So we're going to think about, well, what does our strategy look like today? It's likely a shorter time frame. So we typically plan for those activities and then we understand where our resources are going to come from, but grounded in our strategy, in a process that ideally is ongoing, iterative, because reality is different than we planned at all points in time. So we can start to get a flavor of how it might work for us now in this time of uncertainty. We just have rapidly changing scenarios. And so we're going to talk about what's the framework we can utilize to respond to that rapid change. So we know it's an ongoing process, hopefully team-based with a cross-functional team. So when we think about financial planning, typically in a best case scenario, it's not only held by the person whose title is either accountant or finance director, but who should participate in the decision-making team around financial planning? How do we stay focused on that vision of the future, whatever the future means? Maybe the future right now is 3 months out, but also be responsive. And how do I do scenario planning in an easy way so that when things change, it's not an overwhelming process to revise the plan? So this is really our framework: ongoing, iterative, responsive to what's happening now, nimble, flexible, in a way that incorporates different information we know cross-functionally in our organization in order to use this data to make our decisions. So really that's our high-level framework. In terms of what did it look like in different times when I might have been budgeting, as compared to what does scenario planning look like in this rapidly changing environment, we can understand that, well, under typical circumstances, we might have been planning for 1 year out. We then might have done that annual 1-year budget planning at a really detailed, granular level. And so we were using maybe different layers of budgeting. We might have been thinking of budget, say, at a grant or funder level. We then might have been looking at departmental, programmatic, organizational-wide budgets. We might have been basing some of our assumptions in our budget on the past history, trends, And then we would look for funding for our plans. But there was a little bit of an idea that perhaps we could influence our future. Perhaps we had some kind of way, depending on our course of action we selected, to decide our path. And now it seems like our external environment is more so influencing the way forward. So in this moment, we're having to think about the scenario plan, which we see here on the right-hand side, which is maybe more of an alternate projection. So it might not be based on my past history, original plans I had, but now responsive to external factors. And we might have various different alternative scenarios. So scenario planning, many different alternatives, but planning at a higher level. When we look at a scenario plan in terms of what does that financial model look like, it is not as detailed as your one-year annual operating budget. It is at a higher level, and it's based on some high-level key assumptions that we're going to talk about. It also is really based in some key drivers or some levers, if you will, that are going to inform the scenario. So if you can imagine that you will have to be responsive as external factors change, and knowing that we're going to have to recalibrate, we're going to have to revise the scenario maybe several times over the next year, then it makes sense that it's not as detailed as your one-year annual budget, right? Because we need to take some quick action, we need some quick numbers. And of course, these scenario plans, these models, help you to inform decisions. Again, it's sometimes more reactive than, say, your one-year annual budget. Also, I wanted to point out that some of us during this moment in time are thinking about increasing capacity, right? So we're really responding to need in different ways. And this scenario planning framework we're going to talk about will also be the framework no matter what situation we find ourselves in. So it may be a situation where we have some negative impact, but it also could be that there are different opportunities or maybe some increased demand depending on our mission. We can use this framework and model to address an increase in capacity as well as a decrease in capacity. So then what does scenario planning look like in terms of a framework? It's a three-step approach that we want to walk through today. And it's going to look linear right here, but certainly we're going to understand it's definitely not linear. It starts with understanding our baseline. We're going to understand where are we now. This helps us to understand what viable options exist. So starting with baseline, what do I look like today? Based on what options are in front of us and where I am today, what are some viable options? And let's start building out some scenarios. And that is scenarios with an S, because we're going to find that we're going to build more than one model in this moment. Again, different from annual budgeting where I had one budget. I am going to build likely 3 different scenario options in this moment. Then we'll be able to decide on a course of action using data. So we're still going to continue to make data-driven decisions. And then we're going to be in the mode of monitoring our progress. That's when the cash flow analysis comes in. But as we said, it's not linear. We, again, will have to likely retool our plan and end up in this iterative process of planning, monitoring, and replanning, again, in particular in a rapid way right now. So let's walk through the basics of each of these 3 steps in the process, starting with understanding the current financial position. In this moment, unlike most of our traditional financial planning, the balance sheet is going to be our focus in step 1. So a reminder, the balance sheet is a snapshot in time. So if we froze this moment, what are my assets? What are my liabilities? and it's all on a cumulative basis. So a balance sheet is the cumulative results of your organization's financial activity from inception. It's all of your assets, so everything you own, all of your liabilities, all the bills you owe, and the difference between the two is your net worth. And it's cumulative, again, since the inception of your organization. The balance sheet also then is the place where we can understand some really important key financial health indicators at this time. It's going to show us something about liquidity, which we can talk about. It's going to let us know, well, again, what do I have in terms of debt or other liabilities? It also will give us information about our reserves. So here we can start to see how the balance sheet is informative in scenario planning. This is why we're beginning with understanding what's on that balance sheet, because we're trying to figure out the way forward in a little bit of a different way today. For those of us who are more accustomed to maybe focusing on the income statement or your P&L, if you will, that will typically not give us information about our reserves. How long will my cash last me in this moment? What is my runway, if you will? So that's why we're really, right now, starting with understanding the balance sheet. And so that is the reason why the balance sheet also gives us information about how much financial flexibility we have in this moment. So this is what we're trying to figure out, because depending on how I might have to pivot, I need to know what is a viable option for my organization. So then let's look to see, once we understand what is on our balance sheet, what are the critical questions related to our financial flexibility that we can ask, again, as our starting point, as our baseline for thinking about scenario planning and financial planning in this crisis moment. So if we were to look at our balance sheet and we would see net assets listed there, the net asset section of our balance sheet might list things like unrestricted net assets or net assets without donor restrictions. Again, it's a cumulative position. It is my net worth, if you will, that is free and clear of external restrictions. Your unrestricted net assets or your net assets without donor restrictions are your most flexible resources, and they're resources you already have in hand. So that's the distinction between what we might have seen in our income statement and this cumulative position on our balance sheet. We already own these net assets. Furthermore, if we see board designated funds on our balance sheet, we want to ask these critical questions. What is the purpose of these board designated funds? Board designated funds indicate that our board has set aside or earmarked some dollars. What are they for? What is the process by which we can access those funds? Is that something the board is willing to do? So here we can start to see, for our own organization, what are the questions we could consider? Is the board willing to redirect the use of any of those funds? Remember, if the board designates, the board could undesignate. So really what we're saying is, internally there is some flexibility around these dollars, but it would be at the board level. Beyond that, we can also understand something else about the liquidity of our net assets. So this is also something we want to understand for ourselves as the starting point. We may have what looks like a really healthy balance sheet, really big number of assets, low liabilities, and really positive net worth. But we may have net assets that are not in spendable form. We may be heavily invested in things like equipment or buildings, or potentially investments that are restricted that we cannot spend. So looking at a metric like your liquid unrestricted net assets would be something else we would recommend at your planning stage, so that you could understand, well, maybe there are no restrictions on these assets, but maybe just based on the nature of them, I cannot pay bills with my net worth. right? So it really is all about what is flexible in terms of, is anyone making the rules or restricting the assets I have? Beyond that, are they in a spendable form so that I could decide to redirect or to pay operating expenses? And then once I figure out what's liquid and available, how many months will this liquidity last me? And this might help to inform how far out your financial plan needs to be at this moment. Beyond your equity that's free and clear, you may also have net worth or net assets that come with donor restrictions attached. And so we want to understand in this moment, can we continue to meet donor requirements? So if a crisis is hit and if we've had to make some rapid changes in our programming or services or things of that nature, are we still adhering to donor requirements? If not, do I have to have a conversation with funders, any kind of donor who would have restricted the use of the donations they have provided to us? Would the funder be willing to have a conversation about changing restrictions or perhaps extending timelines? So this is the pre-work we really need to do, because we may very well have some cash on hand that may be restricted for a purpose that we're no longer able to meet. Furthermore, we may have some funds in an endowment. And so if they're of the permanent nature, maybe we were receiving some kind of an endowment draw. Well, what's happening with the market value? Will we still be able to count on that support from our endowment? So again, this is our pre-work before we start to think about what is a viable scenario and then go ahead and model the scenarios. In terms of then step 2 in that process, when it comes to establishing the scenarios, this is where it starts to get a little more complicated, and this is where the real work begins, is when we start to identify implications for us and actually start to think about, well, what are the scenarios we want to model? And lots of work happens in stage 2. It starts with a bunch of critical questions we're going to ask ourselves in order for us to figure out the key assumptions, right? Because we said that scenario planning is really based on a set of key assumptions. We start to think about, what are those critical levers, right? What are the things I need to track to understand how to build out the scenario and how to know if we're on track with that scenario or if we're in that rapid moment where things have changed and maybe we have to change course again. So lots of critical questions here. Stage 1, establishing scenario assumptions. Then we will actually, in this moment, be able to run some numbers. So it's not really until this moment where we're either pulling out our spreadsheet to drop numbers and build a scenario or anything like that. The message is, there is pre-work again in understanding your current financial position, establishing your assumptions, figuring out what are my viable options. Now let me gather data and run the numbers. Finally, then I'm able to select my course of action. Then I'm able to move on, take action, and start my monitoring. So let's look at what happens then in this stage 2 in terms of preparing to generate those scenarios and assumptions. Our planning always starts with understanding who is on that team. We need to establish that team and think about, in this moment, who might be the smaller or more condensed team around planning. Your organizations might have had large cross-functional teams that might have come together around your annual budget. In a rapidly changing moment, it might be hard to manage if you had a team of 20 who is budgeting, as an example. So think about your smaller condensed leadership team. Think about, of course, holding your values always in terms of, equity and inclusion around your team. Think about, certainly we have executive leadership, executive director, CEO. Who from finance will represent on this scenario planning team? Representation from program. Maybe we need to have information related to workforce, but maybe we don't have internal HR, things of that nature. So is this the moment where we need to bring in some outside expertise? Certainly right now, many of us are engaging with an HR expert. Sometimes it's a labor attorney to try and get that information to help us inform our scenarios. Who from your governing body? So again, there are decisions here that might be made that need to also take into consideration someone from the governing body. So is it board chair? Is it finance committee members? Or is it someone else? But now that we can imagine that we'll be building a scenario today, knowing that things will change over time and that we will have to retool our scenarios and be responsive, likely over and over in the course of a year, understanding who's on the team is really important because the team will have to come together in some way multiple times. So again, different than one-time annual budgeting. Think about what are the norms for the ways you will meet in this virtual environment. Think about what will the decision-making process be? What if there's not agreement amongst that team as to the way forward, right? So really think about the meeting structure, the agendas, and the ways you will work together and continue to work together. Now we're going to think about a little bit more documentation of the context. Really here, this financial planning almost starts to look like risk assessment more than financial planning. So that's also a little bit of a framing here that's really helpful. It's a reminder also that our assumptions take the form of words and not numbers. And certainly, giving folks a page of numbers isn't as helpful as giving folks a page of numbers representing a scenario accompanied by the words describing the scenario. So just a reminder that we need documentation of the context. What's going on right now? What are the external factors, threats, opportunities affecting our organization? This helps us to start to narrow down the many options that we might feel are available to us right now. So this is a difficult time for us. We're trying to figure out the way forward. We do not always have the universe of options that we may think we have once we start to document our context. So articulate what is known, what is unknown for our organization. Then let's take it internal. So first we started with a little bit of external. What are the risks, threats, opportunities? Bring it internal. What are we good at? What is core to us? What do we want to preserve in this moment? Again, you're doing this with your team. Can we agree on our strengths, weaknesses? And that's going to be at a couple different levels. Programmatic, what are we good at? What do we want to keep doing? What is core? Maybe what is the demand? Financially, what did our balance sheet tell us? Right? So we're starting to outline what we learned. Think about our business model drivers. So again, from a financial planning perspective, our business model drivers include things like, where does most of our revenue come from? What are the revenue drivers? What are our expense drivers? Meaning, do I spend most of my dollars on payroll? How about programmatic supplies? So we're really thinking of the big categories here of revenues and expenses, and we're doing some documentation. We then will start to ask critical questions to continue to help us focus and narrow down our choices even more. So this is what we're doing throughout the process, is trying to take a scan, document, to attempt to narrow down and focus our options so that the scenarios we model are viable and based on data that we have outlined. So here are some key questions that we might use as a framing to ask these critical questions. We might think about impact on programs as one broad area that we're going to dig into in terms of critical focus and critical questions. We're going to think about, well, what changes in programs are necessary and viable right now? What about our workforce? What's happening with folks in that regard? And what about our overall financial health? So framing questions in this way can help us. Again, these are our identifying our drivers. So then in terms of particular questions around programming, to give you all an example, this is what they might sound like if I were to focus my questions right now in the programming area. We may ask ourselves, will we have to curtail any of our activities? Will we either have a pause, a slowdown, a stop? So again, we are thinking broadly in the area of programming. On the other side, do we have increased demand? Are we increasing our activities in this moment? Again, we're trying to identify, as our team is meeting, broad scenarios in the area of programming. Do we need to keep our activities going, but deliver them in a different way? Are folks thinking about starting something new? Are we trying to respond to demand that we see or respond to a need? If so, can we do that? Or do we need to stick to activities that are core to our mission and activities that we're really best at, and perhaps leave the other services to a different organization? So again, this is a set of 4 questions really focused on looking at the programming. We would have similar questions around the workforce. So we could also turn these questions into workforce-related questions, right? We may ask ourselves, will we have to decrease our workforce, right, our staffing, in response to a decrease in programming? We may also notice that we're trying to keep staffing stable. And what does that scenario look like? Maybe we're trying to hire more. Maybe we're trying to keep staff stable, but folks are going out sick or folks are taking family medical leave act. So what does that look like? So again, asking some broad questions to identify what is viable and what is our path forward is what we want to do in each of those 3 areas: programmatic, workforce, and then overall financial health. Once we have identified the broad option, now is where we can really start to shape the scenarios. So if we were thinking about programming, and if we were to answer one of these questions, such as, will we have to increase, what is happening with programming? Is it staying the same, increasing, or decreasing? Perhaps right now, in response to what's going on, my broad scenario of choice will have to be a decrease in programming. So let's see how that could play out in building a scenario. I've narrowed down then my broad scenario to a decrease. I know I need to model a decrease in programming. That might also then drive me to modeling out a decrease in workforce. Maybe, maybe not, but see how we're asking questions in each regard here. So in this moment, we still might be unsure, what does a decrease in programming mean? It could mean various different things. There could be varying degrees of a decrease in programming. We're also in this moment trying to figure out, well, when does my programming come back? Is it a decrease forever? Is it a decrease that's temporary? So this is why we have to start with identifying the broad scenario, because even the broad scenario has very many potential options. And again, we're trying to narrow our focus because at some point we have to build a financial model. So even in our broad scenario, we're going to develop a best case scenario, a worst case scenario, and somewhere in the middle, a moderate scenario. So this is the message that we should be modeling 3 different scenarios. It's going to be helpful, again, for when situations change, we've already got the different scenario modeled out. We then will think about timing, that time horizon. When will those changes take effect? When will programming have to be reduced? When can I bring programming back? Or, in other words, how long will this change last? Will it be immediate and temporary? Will it be immediate and permanent? Maybe I don't know. And today, many of us feel like we're in the I don't know camp, and that's okay too. But even acknowledging that we don't know about the time horizon is really important. So now let's look at what might some different best, worst, and moderate case scenarios look like if my organization, after going through this process, came to the realization, or maybe in response to what has already happened during this crisis, that we've had to curtail programming. We've had to decrease programming. I know that that's my broad scenario. What do my 3 models look like? And we're going to use an example here of an organization who runs some after-school programming. Well, maybe best case scenario for me right now is that I'm hopeful I will be able to pick up summer programming for half the summer of 2020. And certainly for many of us, that really seems like, wouldn't that be great? For sure, that would be a best case scenario. And best case scenario, school districts will open in the fall of 2020, and I will be able to do in-person programming for children starting in the fall of 2020. So this is a decrease in programming, potentially a decrease in workforce. It seems to be a best case scenario and temporary. So this is how we can talk about and understand the scenario. And again, we're going to describe that in words. Maybe my moderate case scenario is I am not going to be able to run summer programming. I'm going to think about summer is not going to be until 2021, so no summer in 2020 in terms of programming. But still, my moderate case scenario is that school districts will open in the fall of 2020. And so again, my moderate case, I'm still in person fall of 2020. And maybe my worst case scenario for my organization is that still no summer 2020 programming. School districts will not be able to open in the fall. I will not have in-person programming in the fall, but I'm hopeful that even in the worst case, I will have in-person after-school programming in winter of 21. So this is how, again, we can start imagining and trying to predict what will happen. All of these 3 scenarios plan for a decrease in programming, but they're all a little bit different. And so then again, based on the path that your team seems to find themselves in, once we've modeled out these 3, right, we could pivot no matter what happens. Because we will soon find out if we're going to be able to do summer 2020 at all. Hopefully then, sometime thereafter, we will find out about fall of 2020. But we know for sure that right now, all of this is hard to predict. And so this is why it's really helpful to think of whatever moment you're in best, worst, and medium case scenarios. So then finally, once we have outlined what we think might be possible in these 3 scenarios, now we can start to put some numbers into the models, okay? So in terms of running the numbers, again, all the work we did in gathering our baseline data will be helpful at this moment. We always need to know where we're starting, okay? And so we're gonna figure out, again, what was on my balance sheet. If I'm mid-year, right, most of us are mid-year right now, right, different than starting beginning of the year with our annual budget, what does it look like to finish out this year? How far forward am I thinking? Right, so really think about, you've got some actuals as a starting point, but what does the future look like for the rest of this year? How about a few months out? So using that data we've already gathered. When will I know when I have to put an alternative plan into place? So where are we in our fiscal year? Identify the timeline when an alternative plan will be put into place. So if right now, many of us might be a June year end, we may not be thinking about putting together a, July 1/20 to 6/30/21 budget. But maybe let's make plans for our scenario planning right now that might run a few months into the year. Will there be a moment in time, though, that planning committee does want to put into place a longer term 1-year annual operating budget? Or do we feel like the situation is so rapidly changing that we're just going to do these 3 month at a time kinds of financial plans? So really, again, we're thinking about working with your team and identifying how far out we're going to go into the future. How many times are we going to change the plan? Put plans into place to revisit your timeline and know maybe for this next year, how do we want to work together and continue to put together our financial plans. Finally, let's run the numbers. But reminder here, we're going to model these financial scenarios in 3 ways. The words will be equally as important. So we're going to model the financial implications of each scenario, but draft an accompanying narrative for each one. So just like you and I just walked through best case scenario, worst case, and moderate for that after school program, we want to capture those words in a narrative with each of the scenarios, right? Folks need to know when they look at those numbers, what were the assumptions in programming and workforce that drove and informed the models. Also know, and a reminder, that these financial models are not at the same level of detail as you typically budget. So this is what we started talking about in the very beginning. Imagine having to, budget and rebudget in the same way you prepare your annual operating budget every 3 months. Right? We'd never get there. Probably takes us 3 months to put our budget together anyway. So our financial scenarios, again, higher level, not as much detail. We're looking at the big revenue and expense drivers. We're also, again, in this rapid response moment, playing out the scenarios a little bit different. We want to, again, almost take that risk assessment approach. We want to make sure we analyze each of our revenue sources differently when it comes to risk. So we may ask a question that sounds like, what is in jeopardy in terms of any earned revenue streams I have? So really think about each one. Certainly right now, most of us are not able to have special events that we might have planned. Some of us are in a better position with individual contributions. Some of us are not able to generate as much in individual contributions. Some of us are continuing to bill our government contracts and grants. Others are not able to. We talked about what might be happening with our investment income, and is that still a viable option? Maybe it's a moment where we are able to generate more from in-kind donations than in the past. So really look at each of your revenue streams and take a risk assessment approach when we are defining those revenue scenarios. On the other hand, what might be a new opportunity for a source that we can access at this time? So since we've already analyzed our balance sheet, maybe there's something about existing reserves that we learned that is helpful. And maybe if available, some of those reserves could be invested in maintaining operations. Are there other external resources, incentives, loans, or relief from some of the philanthropic funds that have now been created that would be available to my organization? We talked about looking at your donor restricted net assets and trying to understand, are there any donors at this moment who are willing to release restrictions? Right? But again, it's conversation with each individual funder around that. Are there any new opportunities for new funding sources that I might not be thinking of or maybe weren't available to me before? And is it possible that in this moment I have started something new that is a potential revenue generating venture? Right? And so, of course, this is all going to depend on the scenario that was particular to us. But again, we're thinking of it in a different way right now because it's not business as usual. Now, of course, once we model out the 3 scenarios, again, we came to this place through a process by which we understood where we were starting, right? So we understood our current financial position. We then did some work here and had conversations with our team in terms of identifying, trying to narrow down the broad path for us. But we did that by asking critical questions, scanning our external environment, and then understanding where are our core strengths and is there alignment, right, to try and narrow down the scenarios. So then by the time we gathered the data and ran the numbers, what we came up with were 3 potential varying degrees all along one broad scenario path. We then, again, with that team that has come together, can select a course of action, right? Does it look like we're on the best case path? Does it look like we're somewhere in the middle? Or right now, is what we're seeing telling us that we're in this worst case scenario? When we figure out the course of action, when we understand what it's looking like in terms of our path, we then will start to monitor. So now we have to monitor our progress. We have to try and identify what are the things in my monitoring that are going to flag for me that I need to pivot again, right? Because remember, we'll be cyclical. We might start to monitor our progress towards this path we've chosen and recognize that suddenly something's happening differently than even I expected in this scenario, and then I might have to tweak that scenario. Monitoring in this moment also looks a little bit different than maybe monitoring our finances in a typical time. So right now, most of us are most concerned with cash flow. And so there are no rules that we have to follow in terms of, what's the best way to monitor my finances internally, right? So we don't have to do a traditional budget to actual, maybe that we've done in the past. We can definitely pivot to something more like a cash flow, because maybe right now the most important thing is to figure out, do I have money to pay the bills that are coming up? Can I make payroll? Things of that nature. So we definitely can do a different kind of financial monitoring right now. So if we don't already have a cash flow tool that we use, we should develop a cash flow projection. And we also should monitor cash as closely as necessary in this time, meaning many of us might have to create a weekly cash flow projection, which would mean I'm actually looking week to week. What money was collected? What bills do I have to pay? When is payroll? Really, I'm just looking at a 5-day period. And then what is happening, next week and the week after. So really close monitoring. Others of us may be able to look at this at a monthly basis. Maybe some others are able to look at quarterly cash flow, but the message is we can look as closely as we need to in order to keep our eye on cash and make sure that we're thinking about any action we might have to take in this moment. If we're running low on cash and the cash flow is telling us that I need to look elsewhere for some resources, just remember that financing is not intended to cover deficits or structural deficits, sometimes we say. What we're saying is financing, meaning money we're borrowing and having to pay back, is really intended to cover, we'd say, cash flow timing issues. So if we're looking at our cash flow projection and it's showing us, well, this month and the next month, I don't have enough cash to make it, but the cash is going to come in later on, but it's really just a timing issue, then maybe financing is the answer. If it looks like, when I look at my cash flow projection, that I'm never catching up, then maybe financing is not the answer, because finance is not really meant to cover these long-term deficits. But if financing is an option, maybe this is the moment where we can utilize an existing line of credit. For many of us, of course, if we don't already have a line of credit in place, it may be challenging right now to apply for and obtain such a line. But we know as well, we have other opportunities, potentially some low interest loans right now, bridge loans, and we might also be able to take advantage of some of the incentives and opportunities that are part of the CARES Act. So now we are also coming full circle at the moment in our financial planning, in our scenario planning, where once again, we're thinking about our team and thinking about communication. So we did our homework and figured out our starting point. We did a lot of work in scanning our external environment. We narrowed down our options and thought about broad scenarios that were meaningful for us and responsive to the needs of folks we serve. We then modeled out the scenarios. We determined a course of action, and now we're taking action and we're monitoring. And so what is the best strategy to engage other folks to communicate the process we went through, to communicate to folks the path that we're on, right? So how do I engage the whole board in these communications, right? What's going to be the mechanism by which I update folks? What will be the critical points here that will require some check-in, right? Or report back out to the board? Many of us maybe meet with our boards on a quarterly basis, things of that nature. Is that still okay? Or do I need to have a more frequent communication? What about others in the organization as well? Who will have responsibility for operationalizing different components of our plan here that we've laid out? So again, it might look different now depending on maybe changing staffing patterns you have, or again, different folks maybe not being able to work at this moment. So really think about how will your plan take shape, and just being explicit about who will be responsible for what role. And create, again, not only that external facing communication, but internally, who do we need to keep informed? This is likely not the moment for less communication. I know we're trying to take care of our employees and not burden folks, but lots of folks are really curious about what is this going to mean for them. So we want to think really in a thoughtful way about communication and making sure folks are getting information they need.
Thank you, Gina, for that great presentation. Such incredible information on financial planning during a crisis. And thank you for tuning in for today's webinar. If you'd like to check out more information that we offer, please subscribe to our YouTube channel by hitting the subscribe button below. We hope that you'll join us again. We offer great presentations and try to bring you the most up-to-date information to help you in your day-to-day lives. My name is Jeff Niebaum, and I'm with your Better Business Bureau. Until next time, stay safe and stay healthy.